Welcome, my friends. The news today is that Rite-Aid is preparing to file for Chapter 11 bankruptcy to restructure debts. Lawyers to lender groups have signed confidential agreements. Retailer has struggled as it battles opioid-linked litigation. What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And, before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school. As well as any kind of job that requires a government license or certification. And ProWorld.net also includes short-term gig-type jobs as well. So, be sure to check out ProWorldNet.com if you are looking for a job or an employee. Rite-Aid, RAD, stock fell more than 50% Friday after the Wall Street Journal reported the retail pharmacy is preparing to file for Chapter 11 bankruptcy as it faces mounting costs related to opioid lawsuits. A source familiar with the matter confirmed to Yahoo Finance that bankruptcy planning is underway, with part of that plan likely to include shuttering more than 400 stores. Asked about bankruptcy preparations on Friday, Rite-Aid said, "We do not comment on rumors and speculation." Over the past year, the company's stock has lost 90% of its value. The company's market cap as of Friday stood at $41 million, Yahoo Finance data showed. Rite-Aid, RAD, stock fell more than 50% Friday after the Wall Street Journal reported the retail pharmacy is preparing to file for Chapter 11 bankruptcy as it faces mounting costs related to opioid lawsuits. A source familiar with the matter confirmed to Yahoo Finance that bankruptcy planning is underway, with part of that plan likely to include shuttering more than 400 stores. Asked about bankruptcy preparations on Friday, Rite-Aid said, "We do not comment on rumors and speculation." Over the past year, the company's stock has lost 90% of its value. The company's market cap as of Friday stood at $41 million, Yahoo Finance data showed. In a statement to Yahoo Finance, Rite-Aid said, "We have closed 239 stores since 2021. Like all retail businesses, we regularly review each of our locations to ensure we are meeting the needs of our customers, communities and the overall business." In 2022, the company closed a planned 145 stores, with more expected this year. In the latest quarter ended June 3, Rite-Aid closed 27 stores. As of June 3, it operated 2,284 pharmacy locations. The preparations come after the company was sued by the U.S. government in April over its failure to detect what the Department of Justice called red flags around its filling of prescriptions for opioids and other painkillers. A bankruptcy filing would list those opioid claimants as unsecured claimants, according to the Journal. Additionally, the bankruptcy could help Rite-Aid reject lease payments at stores it plans to close, a common tactic used in retail bankruptcy to limit costs. The Journal also noted Friday the company is facing over 1,000 federal lawsuits that were consolidated in Ohio. In April, Rite-Aid's interim CEO, Elizabeth Burr, said on the company's earnings conference call in response to a question about opioid litigation, "I think it's very difficult, as you can imagine, to predict litigation. And all we can tell you is that what we're facing is very consistent with everybody else in the industry is facing." In its annual report filed in May, Rite-Aid said, "Although we believe we have adequate sources of liquidity to meet our anticipated requirements for working capital, debt service and capital expenditures through at least the next 12 months, the costs associated with these legal proceedings are impossible to estimate with certainty, could exceed any applicable insurance coverage, and could significantly impact such liquidity." Revenue in Rite-Aid's most recent quarter, the first quarter of its fiscal year 2024, fell about 7% to $5.65 billion. Its net loss in the quarter totaled $306 million. For those of you not familiar, Rite-Aid Corporation is a chain of drugstores and pharmacies in the United States. Its history dates back to the early 1960s when it was founded by Alex Grass in Scranton, Pennsylvania. Rite-Aid's origins trace back to 1962 when Alex Grass opened the first store called Thrift D Discount Center in Scranton, Pennsylvania. The store focused on health and beauty products, offering customers discounted prices. In 1968, the name was changed to Rite-Aid Corporation. Rite-Aid began expanding through acquisitions, buying smaller pharmacy chains and stores. By the early 1980s, it had grown to over 267 stores across 10 states. During this period, the company also went public, trading on the New York Stock Exchange. Rite-Aid continued its expansion efforts through acquisitions, but it also faced challenges. In the mid-1990s, the company embarked on a major acquisition spree, purchasing larger chains like Perry Drug Stores and Thrifty Payless. However, these acquisitions led to financial strain, and the company faced issues with integrating the acquired businesses. Rite-Aid's financial troubles came to a head in the late 1990s when it was revealed that the company had engaged in fraudulent accounting practices to overstate its earnings. This led to investigations by regulatory bodies and lawsuits. Rite-Aid's founder, Alex Grass, resigned as chairman and CEO, and the company faced significant financial and legal repercussions. As a result of these issues, Rite-Aid underwent a period of restructuring and downsizing. The company sold off non-core assets, closed underperforming stores, and implemented cost-cutting measures to regain its financial footing. Rite-Aid continued to adapt to changes in the healthcare and retail industry. It expanded its offerings to include services like immunizations, prescription refills, and wellness programs. The company also faced competition from other large pharmacy chains like Walgreens and CVS. Rite-Aid announced a merger agreement with Walgreens Boots Alliance, which would have resulted in Walgreens acquiring Rite-Aid. However, due to regulatory concerns and antitrust issues, the merger was not approved by the Federal Trade Commission, FTC. Instead, Walgreens acquired a smaller portion of Rite-Aid stores. Rite-Aid has continued to operate as a standalone company, focusing on its core pharmacy and retail operations. It has also undergone leadership changes and strategic shifts to adapt to evolving consumer preferences and a changing healthcare landscape. It's important to note that my knowledge is based on information available up until September 2021, so there may have been developments or changes in Rite-Aid's history since then. Yesterday's news was that the first big pharmaceutical company has filed for bankruptcy as a result of the ongoing opioid epidemic. Mallinckrodt will file for Chapter 11 bankruptcy, again, and leave $1 billion of $1.7 billion opioid settlement unpaid. What does this mean for other big pharma companies? WeWork has warned of a possible bankruptcy. WeWork said in a filing Tuesday that there's doubt about the company's ability to keep operating as a going concern. The company's stock price has been trading below $1 since early this year. Membership has been weaker than expected, which the company attributed in part to a struggling economy. Vice Media headlined a group of 7 major companies that filed for bankruptcy in a recent 48-hour period. The filings have laid bare just how exposed highly indebted firms are in the wake of interest rate hikes. Data from Moody's and S&P Global suggests the pain could just be getting underway, and could last all year. Yellow Corp, the third largest less-than-truckload freight company in the United States, declared bankruptcy and laid off 30,000 employees. If you follow this channel, you already know that the entire media space is experiencing huge numbers of layoffs right now. If you follow this channel, you already know that the media space is riddled with layoffs right now. Earlier this year, Disney said it would slash 7,000 jobs from its workforce as part of a larger reorganization of the company that will see it cut costs by $5.5 billion. The announcement was made during Bob Iger's first earnings call since returning as CEO. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.